Good morning, everybody. How you doing today? It's Bruce here with Stock Markets with Bruce. Uncle Bruce is in the house. Welcome to the show. Thank goodness it's Friday. It is Friday, June the 25th, 2021. And we're here 1 hour before the opening of the day here, before the markets open up. See what they want to bring us. Looks like we have an up day so far on the pre-market from what I can tell you. The Dow is showing a 105-point gain in the pre-market. We have S&P up 3 points, NASDAQ up 5. Crude down 13 cents to 73.17. That's what we're showing on the big picture so far. The stock making the news this morning is Nike. Shares are up significantly in the pre-market. Had very good sales report last night. And the stock is adding apparently 100 points to the Dow 30 Industrials. So not bad. Why would people sell Sofi this early and in the PM? It has so much future potential. My guess is it's a short attack. I think you're right, Nick. I really believe that this is a staged deal. I really believe there's a seller who's just hitting the bids because there's no restrictions on selling stock short. You don't have to report it. The SEC doesn't make anyone report their short sales, so it's a complete way to a legal way to abuse a stock without any ramifications from any regulator. The stock exchanges don't care. The SEC doesn't care. Justice Department doesn't care. And so innocent investors get swacked around just like, cattle, like no big deal, just beat them up. And there are no ramifications whatsoever for the shorting that's going on. It's an absolute ripoff of the investment community at large, and it is sanctioned by Wall Street and backed up by SEC rules that basically don't make any of these outfits disclose what they're up to. What are your expectations of GameStop joining the Russell 1000? I have no expectations at all. None. It's just another indicator of the company's growth in market cap. And the Russell 1000 people have decided that GameStop is now worthy of inclusion. And so it'll be included. It makes no difference to how much money the company's going to make. Will it make a difference to your stock? I doubt it. If it were to become a member of the S&P 500, which is not going to happen anytime soon, that would make a difference from a what's the word I'm looking for? From a prestige point of view, I guess, right? But it still won't make the company any extra money. Anyway, it's not a bad thing. I'm not saying that this is going to be bad for the stock, but I'm not expecting it to have anything great happen. I could be wrong, though. There will be funds out there, hedge funds and others, that trade in and track the performance of the Russell 1000. And so GameStop will need to be acquired by some of these funds that track that index. But that means, though, because it's probably now no longer part of the Russell 2000, I'm not even sure how that works. I'm not sure if you have to get out of one index to get into the other. I'm not sure. There might be some selling from other exchanges or indexes. I just I don't anticipate much. I really don't. Good morning, Uncle Bruce. I watched Margin Call yesterday, but I found it to be less explanatory than The Big Short. What are your thoughts? I agree. It is not an It's not an educational show. I mean, you have to have a bit of a handle on it. But the more you watch here and then you watch that movie again, you'll kind of go, oh, that's what he's talking about. That he talks about that from time to time. But yeah, that was an interesting episode with some phenomenal actors. But I agree, The Big Short is a fantastic movie to watch if you are a newbie to the markets, and it will help you discern and figure out, pretty good way what happened in 2008 and 9. That movie, I think, went from like 04 to 09 or something like that. With the housing crisis and the financial collapse and everything else, right at the end of the George Bush presidency, just before Obama took over. And this is only one segment of what happened. This is not even the whole picture. The Big Short only talked about some particular traders who were astute enough and were able to figure out and guess correctly, ultimately, that the U.S. housing market was going to be a big bubble, and that U.S. Investment bankers were completely screwing it up by manipulating all kinds of complex trading structures that that were rated as AAA credit rated product when in fact it was junk. It almost crapped out the entire Western world, the G20. It almost crapped out the G20 with the leverage that was being utilized to bet these bets, which were just insane. Unfortunately, there have been changes, of course, but unfortunately, the U.S. and the world is still vulnerable to this type of nonsense yet again. Maybe not as directly, but that is a movie I'd highly recommend. That one you watch a few times. There's a couple of stories kind of going on in the middle of it that are somewhat related and somewhat not related, but these are quote unquote real people being talked about, and real people are complex. We're all complex beings. And so you got a little taste of this person, this person, this person, this person, but the overall picture of The Big Short is pretty darn good. This is a very well-made movie, and I would highly recommend you catch it. Morning, Bruce. We know retail is holding GameStop and buying, raising $1 billion was amazing. Why is the price doing this to us? Like on a no news day like this, where does the selling come from? Again, it's the end of today is option expiry day. So remember, it is entirely possible. It could be that perhaps, maybe on Sofi, on GameStop, on AMC, Sunday, thank you, got it, Sunday, PayPal, got it. These stocks, Sofi, GameStop, AMC, could have been there could have been acquisitions of put contracts made over the last few days by certain entities, traders. And today is the day you short the stock to drive the price down to get the put contracts to go up in value. And right now, puts are being dumped off at huge profits because the stock is down on all three counts. And these guys will finish with the puts. They will pick up some calls for next Friday because the calls have come down in price. And they will then turn around and get their position done and start buying these stocks up and buy back the stock they've shorted and run them back up to the 210 range for GameStop, maybe 215, and SoFi back to 21, 22, and cash out on the calls without worry from this, without any fear of the SEC investigating it, because the SEC is not doing anything. Just my opinion, my guess, a hunch, coincidence? Have you seen it before? I've seen it month after month after month on all kinds of these stocks, and I'm wondering if that's what's going on. Good morning, Bagel Familia. Uncle Bruce, can you talk a bit about the trailing stop? Don't ignore my question or I'll eat regular toast. A trailing stop order, all that is you're watching a stock go up and you want to have a sell order behind the run up. So in case there's a backing up, you get taken out right at the height or as close to the high as you can. And so you put in a trailing stop order. Excuse me. Now I'm not sure. I'm not sure how this works in the world today. You might need to look this up with your own platform trading provider, because each one of these outfits runs their own little show in their own little way, and I don't follow their policies, and I'm not going to. But my guess is that a trailing stop order could be an automatic sell order of, say, let's say 500 shares of a stock. It's a sale of 500 shares if that's what you want to offer up. And that might be a certain number of pennies behind the last trade or the bid and the ask. So as a stock is going higher and higher, your trailing order is there. There's a sell order following the market. It's your sell order. And as soon as the shares have a little falter, they breach the price point of where your sell order is established, and you're sold out. And no matter what happens to the stock, if it goes any lower or starts going higher again, you're out. And that to me is what I think a trailing stop is. Now, in my day, we had stop loss orders and that kind of thing, but those are all manually done. So the broker would be watching a stock, and we would see that IBM is trading at 36.50, and you're in at 35, and you put a stop loss in at 36.25. And as long as the shares stay at 36.50 and keep going, everyone's happy. But if the shares were to back off from 36.50 to 36 and a quarter, as soon as there's a trade at 36 and a quarter, your sell order is activated. And on the floor, they would then sell your shares of IBM at 36 and a quarter or at whatever market price they can get for it. But in the case of IBM, you would always have bids at every eighth of a dollar in those days. So you get off at 36 and a quarter or 36 and an eighth, 36 even. You're sold out, and then you get a call from your broker going, "Hey, your stock sold this morning at 36 and a quarter on that stop loss we put in. That was good for the day, or good for the week, or good for this month, or good till canceled." That's what we've done, and there were some accounts, not in my house really. It was such a rarity that this was ever done, but there were some accounts with margin accounts, and also larger hedge fund type accounts, where they would put in trailing stop losses for a portion of their stock, maybe not all the stock they had, but certainly some of it. And they would want to at least say they had, say, 5,000 shares, of which they were borrowing money on 2,000 of them. They had margin. They would have a 2,000 share sell order as a trailing stop loss, so that if the stock backed off, they would be blown out of their 2,000 shares, and that would pay off the entire debt that they owed the brokerage house, and the remaining 3,000 they had were fully paid for, fully covered. And the shares backed off a little bit, they would try to buy a couple thousand shares back at a lower price, and if the market starts to come up again, they would start putting in trailing stop loss for those 2,000 shares again, and they would try to catch a little wave each time, a buck or two, and then get blown out, and they're liquid, and they sit back and wait, and then they see the stock bottom out for a couple of days or a week or two. Sometimes it's a month. Sometimes the stock will just have a long 2-month slide. I mean, these are strategies that are not minute to minute, second to second. They can be week to week, month to month strategies, and in and out they would go with these orders. But that was then. This is now, and hello to the world. Welcome one and welcome all. Thank you, everybody, for that. If you'd like to talk to me about a 1-hour session, you want to get together with me, send me an email through my email address, which is right here. It's the old school hotmail.com email address. Send me an email. Say, Bruce, I'd like to talk to you on a one-on-one session. When can you book me in? I'd like to make a reservation and lock it in right away.